The key benefit that you can derive from the new tax regime is you are at absolute liberty. With a free mind, you can do your financial planning.
Hi, you're watching Investors Hangout, a weekly interaction to help you understand savings and investment issues, brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Now, in her budget speech this year, the finance minister announced that the new tax regime will be the default option for the taxpayers. What it meant was the entire system, it became simpler with the new tax regime, with lower tax slabs, reduced rates. But then there are a lot of deductions and exemptions that are not a part of it, that you cannot avail, like the HRA, the deductions under Section 80C, 80D, none of that you can avail under the new tax regime. So if you opt for it, do you need to change your financial plan, or can you stick to your old financial plan? We'll discuss that and much more in today's episode. Keep watching.
This union budget has made the new tax system as a default thing. If you don't really choose deliberately which of the regime you intend to go for, it will be assumed that you are going for the new tax regime, which means every planning, all the TDS, all the deductions and deposit of taxes will be done based on the assumption that you are not going to take any deduction. And this is a huge difference. The tax rate is marginally lower for people in the higher tax bracket if you don't take any deduction, because all our, we have been used to all kind of rebates and deduction while computing our taxes. It depends, though it is not mandatory. You can still choose the old scheme. You can take into account all the old deductions, all the things that you have been making. For example, your 80C deduction or your home loan repayment going on. So you can still take that, but it depends. Depending on the scale of your income, at beyond a certain point, it is not profitable. It is not beneficial for you to be choosing the old regime, simply because once you cross a basic threshold, the new tax regime actually gets you greater advantage. Your tax bill is lower. And to know the exact implication, go to Value Research online, look at we have just installed a tax calculation methodology. So you can put your income breakup, and there, based on your income breakup, we will be able to tell you which of the two plans is more beneficial. The Income Tax Department has also launched a calculator on its website, incometaxindia.gov.in, and put your income breakup. It will be able to tell you precisely which of the two regimes will be beneficial to you. It is a great disincentive for anybody not to be guided by the tax breaks that you get while choosing your investment. It has the potential to bring about a very meritocratic decision making for your in your financial planning. So maybe use this as an opportunity, because most people have been, there is an inertia. You started a PPF account and you carried on. You started a ULIP and you carried on. You started an insurance policy, endowment policy, and it carries on. Maybe take a stock of that, because if you are going for the new tax regime, all of the tax break is useless now. Nothing matters. So go for a health insurance, go for a life insurance, give up on everything, and retain your PPF or EPF only if it actually fits your requirement. Take a very hard look at your financial situation. Think of the ideal situation that should be for you, and how much should be equity, how much should be fixed income. Simplify your financial life, and no better opportunity than choosing one of these two plans. The key benefit that you can derive from the new tax regime is you are at absolute liberty. With a free mind, you can do your financial planning and go by the merits of each and every investment, and take a simple hard look at how much money should be long term. If you don't have equity, move your fixed income investments into equity. If you are still 10 years away from your likely to need that money. Besides that, you can't really you can't do anything special with the new tax regime, because the whole idea of new tax regime is that all the deductions you give up on all the deductions, simplify the things. What you earn, pay a percentage, end of the story. And this will also make the tax filing and everything much simpler. There is one benefit which some people can derive in the new tax regime, and that is applicable, that is available only to those people who have the flexibility of structuring structuring the way they derive their income. If your employer agrees, then there is a provision that 10% of your basic salary can be deposited can be invested in NPS by your employer. So that money can well be part of your cost to company in your current scheme of things, in your current cost to company framework. If your employer agrees and puts 10% of your basic salary in the NPS, that will effectively be a tax-free investment. It will be deducted from your income. It will be not considered as your income. It will be an expenditure for your company, and so effectively 10% of your basic can well be, if it is finding its way into NPS, that could be tax-free.
Well, that's all we have for you in today's episode. Keep watching this space for more information. If you like the show, do subscribe to our YouTube channel. Take care. Bye for now.